All right, so now we're going to look at the problems, the 70 points of the test. This is honestly probably the multiple choice. It's a little harder to get traction on because you really do have to be a student of the material to get the concepts. Sometimes it can be a little, maybe just that extra mile you're not quite able to move into. But what I tend to see over time is that people do firm up on problems over time as long as they're willing to put in the work. And that's the big part of problems. You gotta work a lot of these. Never fear. I don't leave you completely adrift. I'm gonna go over to the doc cam. This one uh probably was the one that stumped the most people. So cash and accrual information again was, the topic of our first Zoom hours meeting. I have a couple of videos there for you guys to have looked at. I do want to reference a few problems though. Chapter one. So my chapter one study problems, example 8. I worked a couple of these on a video and we went over them. Um, Yeah, they look like this. Actually, apparently I lied. It's example 7. But yeah, I'm giving you accounts. I'm telling you some cash flow information. We set up some T accounts, beginning and ending balances, incorporated the cash flow information to get the revenue from the interest revenue. Same thing with the interest payable account. We said, oh yeah, we started with 52, ended at 39. We had a cash payment. This must have been the interest expense. Hey, look, this is it, right? I mean, not exactly mirror imaged of each other, but you're doing the same thing. Also, McGraw Hill. And I think I had these wrong when I was given feedback in your exams, in your graded exams. But it was question 12 and 13 of assignment one. So I know we all know, every faculty knows about Chegg. If you're chegging your McGraw Hill homework, well, hey, you got your 5 points, but you might have missed 20 on the test. So I don't think Chegg is that worthy of an investment for your money. Put the time in doing the assignment, making sure you look at the things that I highlight and ask questions. And there you go. 20 points are on the table. So let's look at this information. A company disclosed the following regarding cash receipts and payments during the year. It's a company that offers consultation on data security, accepts both cash and credit terms for services provided. For services provided. So this is not a company that, and I underline those, underline those very same words when I was going over these problems. When services are provided and we're receiving cash or invoicing our customers, those are revenues we can recognize. So both of these are able to be recognized. Not only the cash collected from customers, credit sales, also the cash received from cash sale customers. Now, when we're dealing with the customer credit sales, the cash collected from customer credit sales, that would look something like this. Debit cash, 1.2 million. And this is for services already provided. Credit accounts receivable, 1.2 million. And the idea that this journal entry involves no revenues or expenses, but accounts receivable should kind of cue you, especially if you worked a few of these problems, to bringing out the information from the accounts receivable account and trying to incorporate that. Because this is cash receipts for 2025. We'll hear the bookends or the balances for the beginning of 2025 and the end of 2025. So that's 275,000 there. 450,000 here. And I got a cash collection, 1.2 million, right? It was a credit during the year. Helps describe some of the movement between those balances. Well, this is not balancing. I cannot deduct 1.2 million from 275 to come up with 450, right? It's impossible. So you solve for this amount because when we debit accounts receivable, tends to be like 99 out of 100 times, what happened was accounts receivable, sales revenue. So this is the way I'm going to come up with my sales revenue amount is by understanding what was debited into the account receivable account, given that I had these balances in that cash collection. Now, the way I personally mathematically work this is I determine how much the account either rose or fell, and then figure out then what the net of these two is. So for example, in this case, it rose by, I had a change of, it went up $175,000 from 275 to 450. That means that I have to now ignore the balances because I'm just looking for what these two had to give me. This unknown amount minus 1.2 million had to give me a positive 175 in order for this to all work out mathematically. And so that means that I must have recorded 1,375,000,000 dollars of accounts receivable and 1,375,000 dollars of sales revenue. So this is my credit sales revenue. Now the cash is much easier because if I'm receiving cash for services provided, then that entry is simply debit cash, credit sales revenue. Because I have the cash in hand, so that criteria is met. And if the services are provided, then I can record the revenue. So this was my cash-based sales revenue, my credit-based sales revenue. Now, now one note here. This was something I took out of the test because obviously it's near impossible to show me T accounts with the crappy browser they give you or the crappy inputs they give you on Blackboard, and I apologize for that. Do use T accounts on your scratch paper, please. All right. And I will also toggle an option that will allow you to take a shot of your scratch paper for me. We'll see how that works. It should be with your webcam. I haven't used it before because it's new with Ultra. So we'll see how that works. I think it might help, but anyway, we'll see. Uh, however, showing work. All right, now I'm going back to face just to show you how serious I am about this. Unnecessary, but to emphasize the point, I want to give you, I want to give you credit. I hate, hate, hate putting a zero in for any one of these problems because I know if I put a zero in for a 20-point problem, I probably just failed a student, right? I don't want to do it. But if you give me, for example, on this question, two numbers, all you say is total revenues, an amount, total expenses, amount. That's either right or wrong. I have no work to go through. I have no explanation of how not even a textual explanation like, oh, I evaluated the balances of the accounts and incorporated the cash flow. Not that I expect that, but I don't see any math. And so I can't even begin to guess at your thought process. And I can't give you any points. It's either right or it's wrong. And I hate that. So show work always, every time on every test. Help me help you because I don't want to put that zero in there. But if it's wrong, it's wrong. And if you don't give me anything to show that you had some correct thoughts along the way, well, I can't help you. And even more sad, I'll go back to the paper now. Even more sad is I get that some people probably knew that that was revenue, but then they just summed it up with this amount, which was wrong. And I had no idea because there was no additional explanation. So, make sure you give me that work so I can give you some partial credit. Um, in fact, like how I would do this on my scratch paper and then I mean, how would you represent this on the test? Well, this is what I would do if I was taking this test as a student. I would say, all right, this is my cash sales revenue is equal to 300,000. And then no, that's really no explanation necessary because I just took it straight from that. I mean, you could write out like cash already taken for services performed, therefore, but you didn't need it though. Um, I mean, the math helps me see if you just made a little foible with your math. So then credit sales revenue, lacking a T account, would have to be, something along the lines of the 450 minus 275. This is what, I mean, I saw this more than once from people showing work. Okay, so there is, everything, journal entries, T accounts, they're all math. And so there's a way you can math it out. You just got to be careful with it. Okay, and we'll see what I mean by that in a second. Because, for example, taking the ending balance, subtracting the beginning balance, noting that as the overall positive increase, um, then getting at, oh, this had to be 1.375 because it had to be 175,000 more than 1.2 to get up to here, right? All of that logic first is much harder for me, and I'm pretty quant sufficient than just seeing it in a T account. Okay. So the other problem is once you start dealing with liability accounts, you got to reverse this. And so T accounts, T accounts, T accounts are your friend, right? It gets rid of this whole like positive negative polarity that goes on in between assets and liabilities, right? So this, for example, would be great work to show. That's all you would have to really show me. But then if the math is messed up here and like maybe you entered this and you just screwed up entering it into your calculator and you got a wrong amount here, I still give you credit because I noticed your inputs are totally right. You just flubbed something when you were entering it, right? Um, or maybe you got this wrong, but you got that right. Well, at least you got 4 points for that. Show your work, please. All right, let's look at the other ones. We got cash paid for interest on debt, cash paid to employees, and cash paid for rent. But each of these has a corresponding account that if you've done enough accounting cycle, you would realize, hey, um, this is related to interest expense, this is related to wage expense, this is related to rent expense. And so again, it really is just a series of T accounts that we need to isolate and look at. Here's my interest payable. It starts at 60, ends at 10. It's credit based because it's a liability, and you got to make sure they're on the right side, or else that will screw you up in terms of being a debit or a credit. That's what I mean by the right side. Wages payable. It starts at 150 and heads to 320. And then my prepaid rent, that starts at 0, ends up at 12. And that's our asset. Okay, so now we get the additional information. Cash paid for interest on debt. Well, if I'm paying off a payable, that's not gonna increase my payable rate. So that's 70K debit there. Wages paid to employees. we paid 650. That will reduce my wages payable. It would be a debit. So we're just including the cash flow information at this point. Cash paid for rent. Okay, now we're dealing with an asset, but still we're spending cash, so it has to be a debit. And then we're just solving for the missing amount. This went down by 50. Well, this says it went down by 70. All right, well, I need to bring it a little bit up with whatever I put here. In fact, okay, that's just adjustment of 20 because now if I look at 70 and 20, all right, well, the 20 takes away 20 of that. It's still $50 after the 20 takes a little bit away. 60 minus 50 is 10. That's correct. I go from 150 to 320. That's a 170, $170,000 increase. But I reduced it by 650. All right, well, then that means I need 820 here in order for it to get to the appropriate ending balance. And then finally, the prepaid rent started at nothing, went up to 12. We put in 24, so we must have taken 12 off to get 12. And then each of these would correlate with, oh, yeah, it's rent. Sorry, I was calling it insurance maybe. Rent expense, debit 12K, credit prepaid rent 12K. And you can repeat this for every one of them. Debit wages payable. I'm sorry, credit wages payable, debit wage expense. Credit interest payable, debit interest expense. These are my accrual expenses. And in adding them up would give me the total accrual expenses, right? But again, make sure if there are three different types and it's worth 12 points, give me each type. That way I can give you as many points that you deserve on these questions. All right, so the adjusting entry error. These were really stacked up in chapter two study problems. There was a pre-recorded um, video of me working through at least one or two, I don't know, one or two of these. But there are like four in your chapter two study problems. And this one actually I simplified a bit because I did not ask you the errors in the second year, which tend to be the part that really confuse students. So I decreased the difficulty pretty significantly of this guy by chopping off that second year, just asking you about the first year. And in this particular example, what the approach that I suggest is to show, to compare what they did do, which you really don't need to copy over again. You might on the test because of the whole, no pen and paper, but this is what they did do. Now let's map out what they should have done. And this, was moderately successful for most people. Um, what they should have done was debited prepaid insurance and credited cash because they are buying a, excuse me, a 2-year insurance policy to cover the equipment that they use. And if it's 2 years and they plop down that much cash, well, they do get insurance coverage of $360,000. They did pay that much cash. So the cash is not in question. Cash is fine. Um, this is at the date. Now, they would have to make an adjustment though, because from July 1st to December 31st, they've used insurance. So 360,000 is a 2-year policy, and that would boil down to $180,000 per year. But we're not even talking about a full year, right? We're just talking about July 1st. Oh, ah, that should be 9/1. Sorry. 9-1. So we're not talking about a full year, not talking about half a year. I'm gonna have to check that. I'm gonna go through people's tests. If you did half a year, I can give you some credit there because of that typo. So you might have credit coming to you if you said the error was 180. But from what I recall, there's I think one or two that did, and I did understand why. Now I do. But and I will give you credit for that if you did. So, oops, not one half. If we're doing September, then we're thinking September, October, November, December, 4 months. So four of 12, 4/12ths of this per year amount. And that gives me 60,000. All right. So that's 60,000. This is the amount of the adjustment we have to make. Debit insurance expense for 60 and credit prepaid insurance. All right. Now, yeah, and here's a net income effect. Here's prepaid insurance. It's asset going down. You don't necessarily have to do that. I just come in the habit of doing it all the time. So where's my prepaid insurance account at the end of the year? Prepaid insurance started at 360, and it looks like we should have credited it by 60, which would have left me with 300. This is the asset that should be reported at 12/31 of the year. And under what they did do, they didn't record an asset, right? They just didn't record this at all. So all 300 is missing. And so assets are understated by 300,000. Do we have an issue with liabilities? Well, there's absolutely no liability accounts that I should have recorded. I did not record any liability accounts. And so there's no effect here. In terms of income, I recorded 360,000. I should have only recorded 60,000. So I overstated expenses, which understates net income by 300,000. And then the last piece is that by virtue of closing entries, right, I'm going to close every single expense and revenue into retained earnings. And so any error that affects net income is going to be fully represented in the retained earnings account at the end of the first year. Excuse me. In the second year, that it changes a little bit, and that's why it gets a little more difficult. But for this, what I asked of you, it really was an analysis of this mistaken entry versus what should have happened. All right. Um, the final one. This one's a long one, and I'm not. I want to I want to point out some things. I don't necessarily want to work the whole problem. I will put my key that I've already developed on a separate page, a separate packet. I will scan it and put it up for you to look at in case you had some errors here. Um, most of these are just adjustments, and I mean this one. Yeah, there's a video about chapter two study problems. I know those for sure because I cover them all the time in every class to some degree or another. Two, three, five. Every single one of those was like this problem. These two are almost exactly alike and a little harder. This one, it was only different in that it's based on an accounting period of a quarter. Whereas those two were based on the accounting period of a year. And I mean, I took a full Zoom hour to work number two and make a video of it, the entire thing. Um, so for these, Yeah, that was really, and also if you're just talking about adjusting entries, chapter two study problem number one has tons of adjustments by themselves, not in this format, but just if you didn't really understand what adjusting entries are all about, man, they gave you like 10 of them at least. So the building, total useful life of 40 years, no anticipated salvage, uses straight line. We take the 10 million divided by 40 years. We get depreciation expense of 250K per year. That would be a debit to depreciation expense and a credit to accumulated depreciation. For this one, right, I gave you a little more information than you really needed. But it was totally doable if you knew what you needed to provide for this year. So they paid our tenants. So that was the first thing. First, make sure you understand we're talking about deferred rent revenue, the company's deferred rent revenue. We're not renters. We are renting to other people, our tenants, right? Our customers. And our customers paid us $280,000 on 7/1/24. Okay. They are 2-year rent contracts. So they pay us in full, man, to be that landlord that has all their renters paying 2 years in advance, right? 2 years in full on July 1st, 2024. So the original amount they paid was 280, right? And that was back on 7/1. So if we're thinking about what this account looked like over time, right? Maybe it was zero, not 100% sure it was, but then they made this payment, 280. That would have increased our overall liability on July 1st, 280,000. Then when we provided them a half a year of the full 2 years, right? That's a quarter of the total contract, a half, right? Because 2 years can be divided into 4 1/2 years. So when we provided that to them, it brought it down to 210. This was revenue recognized, or this is the effect of, I should say, revenue recognized in 2024, at the end of 2024. So now we're at this balance, which tracks because this is the opening balance and prior to adjustment for 2025. But now we need to take a year off. And so that's pretty easy because if this is half a year, then a full year would be a debit of 140 to this account and a credit of 140 to a revenue account. That would be my 2025 adjustment. So some people kind of got um, caught up in using 70,000, but that was a 2024 revenue. And no, that's not a trick. That's making sure you're not just taking an amount, dividing it by 2 years, multiplying it by a half because it's a year. It's just seeing if you're paying attention and reasoning through. So if that's a trick, well, then I'm guilty. I want to make sure that you're actually thinking and reading. But beyond that, it's not a trick. It's recognizing that $70,000 of revenue was in 2024, $140,000 of revenue was in 2025. That would have been the amount for that second adjustment. Debit deferred revenue, credit revenue. The interest, this one was pretty straightforward. We signed a note on 4/1 in terms of borrowing this money, 1.5 million. So we take the 1,500,000, multiply it by the percent, the annual rate, and then understand that that's an annual rate. So if I want the per month, I have to divide it by 12 and then multiply it by the number of months that I want it to represent. And that gives me the amount of interest expense I should have recognized, which was 56,250. So I would debit interest expense, credit interest payable. That was, and remember, yes, it comes from the note, but we keep interest and principal separate when we're doing accounting, right? We want to have that interest not be combined into this note's amount. Um, the effective tax rate, some people just skipped, or if people got it wrong, they just skipped it. Um, you know, the ironic part of the effective tax rate is if you know, even if you had gotten each of these adjustments wrong, the 250, the 140, the 56,250, as long as you showed me your work, you could have gotten this one perfectly right. Okay, because I'm not going to double count you. If you answered 70 here, and that screwed up your tax calculation, I'm not going to dock you again for that. I already took off my points up here when you said 70. So, show your work, show your work, show your work. The tax one I will show the calculation for as I have these others. Um, Remember when you're dealing with the tax expense to charge, you want to consider all the revenues, both adjusted and unadjusted. So here's my unadjusted revenue. I adjusted for 140. I have to include that. And then I need to subtract all my unadjusted expenses, the ones that came from an unadjusted trial balance, and then subtract off the expenses I adjusted, 250 and 250 and 56,250. So these are my revenue, unadjusted, revenue adjusted, labeling things in your work. Oh God, it's a grader's dream come true. That way I don't have to chase down numbers, especially when, as I said, hey, if you screwed up some of these, I could have still given you full credit. Um, and I would have looked like even if you didn't label this 250, if you had if you had miscalculated 200 on your depreciation, but that's what you showed in your depreciation entry, I'd have followed it. I would have been like, okay, yeah, his tax expense is screwed up, but it's because of this that he already screwed up. Not a big deal. No more points are going to be taken off now. So basically, I'm combining, remember, all of my adjusted and unadjusted revenues and expenses. Some of those two were unadjusted. These two came from adjusting entries. And we always do the tax expense as the last entry because we want to include all of them. So we have $990,000 of total revenue. Subtract these expenses off, and I get 409,750. This is my pre-tax income. Understand that when we're taxed, we are not just taxed as you and I are off of our income, like off of I'm sorry, our revenue, because really our our take home already has some deductions, right? But we get taxed on a big amount on our gross pay. Companies do not, right? That's part of the reason why some people like creating bogus LLCs so that they can shelter some tax and report less taxable income. But anyway, we take the revenues, we subtract the expenses. This is what's taxable by the government. We take 20% of that. I told you the tax rate was 20. And then when we take tax 20% of that, it becomes $81,950. This is our tax expense for the period. And that's a debit to tax expense, a credit to taxes payable, right? The closing entries, all you have to do, note well, real quick, notice we do not include dividends in this tax piece. But for the closing entries, what All you really have to do is close everything below retained earnings. And also, so all of these unadjusted revenues, expenses, dividends, also anything we adjusted gets closed as well. And so that would give me my amounts. What is the most ironclad way to deal with that, honestly, in showing your work? Of course, it's not easy showing journal entries in text format, typing them through like that. But those are simple enough. I can combine them oops, sorry, I really screwed that up. That should be income summary. If you had credited retained earnings, that's fine. You just, I accounted for that. The book does it. I'm not a fan, but if you are, go for it. I don't think it's the best way to communicate what's going on here and all of our expenses. Now, understand that when we're closing expenses, we got to close all of them, not just the unadjusted ones, but the adjustments we made, depreciation expense, interest expense, and tax expense all get closed out. All right. And let me do that calculation in mass. I'm not going to carry forward all the numbers. So 250, 250, 500, and then 24 and 56, 25, 580. So altogether, I just did this calculation, 580, 250. And yeah, so these amounts, I'm not going to rewrite these amounts. Oh, I didn't know that's not everything. I did forget to include tax expense. My bad. Plus, so I got 580, 250 plus 81,950. 662.20. All right. So the third step in a closing process, if you're using the income summary, which I kind of suggest you should because it is definitely more technically correct. Um, we threw 990 as a credit in here when we closed our revenues. We put 662.20 or 662 200 in here when I close my expenses. I take the difference or I reconcile this account. It reconciles to 327.8. Now this has to be zeroed, and we're going to zero it by closing it to retained earnings. Oops. Except the debit was made to income summary. See, half the reason why it's best to disclose and show all your work is that you can do asinine things, even if you've been teaching this course for 10 years. There's just a lot of little things that you can screw up on. And if you show your work, I can say, oh, well, he knew or she knew what she was doing here, just screwed it up a little. I'll take maybe a point instead of three. And then finally, we close our dividends, which were 40. No, I always seem to make dividends 40,000. I have no idea why. All right. So these are my closing entries. To determine retained earnings, you just have to do another T account. I mean, yeah, there's simple equation, but get proficient with T accounts. I swear to God, it'll help you. Um, I don't do T accounts because I'm bad at math. Some people I've had students say, "Oh, I don't need T accounts. I'm good at math." And I said, "Oh, really? I have my PhD, but I'm not good at math. That's why I use them, I guess." I'm good at math too. They help for other reasons. Trust me. So that is the beginning balance of retained earnings, 7,800,000. And credit retained earnings, 327,800. And debited retained earnings with those dividends. And we bring that together, add it all up, reconcile that account. Is $80,087.8 or $8,087,800 is what that really comes to. But this is my ending retained earnings. Okay. So really, you know, and it never failed for me as a student. I'm sure it's still true these days. You see the accounting worked and you think, my God, how simple that was. Why didn't I? You know, a lot of these things can be answered very quickly if you know what you're doing. The problem is to get to that point, you got to work a lot of problems. And every one of these, I mean, none of these problems came from thin air. They all were available in multiple iterations for you to practice. The multiple choice, yeah, this gets, but you know, I still tend to weigh in on things. For me, what I really lectured about in focus was revenue recognition, expense recognition, the definitions of revenues and expenses, cash versus accrual systems. Boom, 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 boom. Yeah, at least so five of them, half of the multiple choice were my emphasis. Pay attention to what I'm talking about. Pay attention to what I emphasize. Pay attention to the problems that I record. And if you work through those things, you work, or if you're not sure, you're like, hey, you worked this problem. I liked it. I liked your explanation. I want to try it myself. I can tell you two or three other problems to work so that you can get better at it. Like I'm here to help you, but I received maybe three emails about topical information like, well, how do I do this? Or why is this question this way? I need more of those if I'm going to help you. Just plain and simple. So that's the test, and there's room for improvement. I'm here to help you improve. I'm going to throw out some bonus opportunity to help a lot. You know, probably at least 10 points of bonus opportunity that will be coming up here in the next couple of days. So make sure that you pay attention to it. And yeah, I'm here to help.